Now, again, as I mentioned, nothing in this report to me stands out as changing the trajectory of the Federal Reserve and its interest rate increases. That is largely what the market cares about. So let's turn to our Ines Ferré, who is taking a look at some of the initial market reaction here. I'm seeing it looks like we've got some more yield curve inversion between the 2s and 10s on the back of this number.
Yeah, that's right, Julie. And if we just take a look right now at futures, to keep in mind that at first blush, it's a little bit of a head fake when it comes to futures. We have to see how we go throughout the rest of the morning and into the open. But we're looking right now at the Dow futures. I put up a candlestick chart, and you can see a little bit of a tick down right now. You've got for the Dow earlier, Dow futures were up 166 points. The NASDAQ futures, NASDAQ 100, also a little bit of a tick down initially. And then you've got the S&P futures lower as well. I'm going to take a look at the 10-year Treasury note futures. This moves inversely to yields. So we're seeing it tick down here, but this would mean yields going up just slightly. Also, looking at gold futures. Gold futures earlier were down ahead of this jobs report. Now down about 1%. I know you mentioned crude oil. Crude usually doesn't move with jobs reports, but we have been mentioning it just because it's been so volatile, especially yesterday after the U.S. announced the release of reserves. Also, the International Energy Agency talking about perhaps some emergency release as well. Also looking at the equities market just under the hood a little bit. I just want to see where we're at with the sector action. We ended in the red yesterday, but we're seeing here futures that are in pre-market. Financials are set to see some gains here, and you've got communication services, industrials also set to see gains. Just looking at some of the comments that I'm seeing about this jobs report, that unemployment rate jobs market tightening at 3.6%, very close to that pre-pandemic level of 3.5%. Julie, Brian.
Thanks so much, Ines. Just wanted to recap one more time. 431,000 jobs added to the U.S. economy last month. The unemployment rate ticking down to 3.6%. Wages rising year over year, 5.6%. I mentioned the revision in February. There was an upward revision in January as well. So the net upward revision for January and February, 95,000 jobs. So that there was an undercount. Now we've got the revised numbers. So that is potentially good news as well. I'm also watching the yield curve very, very closely. It is inverted. The 2s, 10s spread just barely. Now it's under a basis point, but that is something definitely that we have been watching closely, and the street has too.